Hello and welcome to Market Watch for the end of the week that started on the 20th of November 2017. It's all about the RBA, and this week was quite interesting for almost the bemoaning that is the sort of the state of our economy, on the idea that things are looking rosy on one side but aren't picking up and where it really matters on the other. And I was going to really harp on what the minutes told us this week from the RBA, but realistically it comes down to the speech coming out of Philip Lowe, and he has been one of, if not the most hawkish member in the board. He's always been quite positive. He's had a really good outlook and a really positive outlook on growth. He's had a positive outlook on slack pickup from the non-mining space. He also believes that inflation was going to move towards their target band over the forward 2 years, and that clearly isn't happening. And that is what he's now talking about inside that, and is really highlighting an index you don't normally really put a huge amount of emphasis on, which is the wage price index. It's something I've been speaking about quite consistently over the last few weeks, and it is now becoming one of, if not the most important point on the market with regards to the expectation that builds into inflation, the expectation that builds into consumption. All of that's inside of what he was really decrying on Tuesday night. And the interesting next point about that is that if we aren't getting wage growth, what does that therefore mean for the economy as a whole? And he clearly is concerned. He still says that things are going to be to the upside if we're going to move rates anytime soon. It did move the Aussie, and I'll certainly put the chart up and you can see it right now that there was that little tick, just a small one, but a reasonable tick up on the back of his comments. But I think you need to sort of digest what this really means, is that monetary policy, as I've said before, is out. It is not going to be the influencer around currency. So therefore, in a low inflation environment, growth is going to be the mover for our markets in the next year to maybe even as much as 18 months. And you may disagree with that, but that's how you can see this, is you can see that low inflation is where we are at as well. Low inflation therefore also means that monetary policy follows suit, which is an accommodative policy. And those two together really do help growth. So there is a positive and a silver lining to it, but what a week. It's very interesting to hear our central bank bemoaning the current situation.